What's going on, guys? Welcome back to the channel. Today's video, I'm going to go over the trades that we took on Thursday and Friday, as well as the game plan going into this week. So last week was a really good week. I mean, the market moved nicely, and this is what we looked like on Thursday. So if we go back to the contracts here, these are the 620s, but it's pretty much the same scenario. We were bullish. Why? Because the 10's above the 50 on the Friday call contracts, and we're only focused on the long side, and we got the perfect setup, and it was a 0-day cross on calls. So if we flip back in here, here's the move we got on Thursday. Didn't have video up Thursday, so I wanted to go over that. So this is the chart that we had right here. I mean, look at this. This is super clean. 10's going above the 50, 50's curling up, and we got a massive move out of this. I mean, it really doesn't get easier than that. That's all you needed for the day on Thursday. Really, that's all there was. I mean, you just play this cross, milk out the points, and that was that. That's literally all you had to do on Thursday was play this cross, and you would have had your day paid for. So that was that. And then on Friday, again, we're still bullish. Why? Because the 10's above the 50 here on the 30-minute chart. So this is 9:30 open. 10's above the 50 on the Friday call contracts. We got the 620s because you guys know on Fridays we pick new contracts. We go for the next week out contracts because the current ones would be the 0DT contracts. So the 620s is what we were watching. And again, same thing on these ones. 10's above the 50. That means we're bullish. We're only focused on the long side. So I'm gonna flip to the 0-day chart now. I mean, really, the only entry you would have had was like right off of open, and typically, I'm not trading off of the open. So if you didn't catch this, you didn't catch it. If you did, you did. Just a little bit higher risk playing this off the open. But I mean, we held the 50 right here, and if you did want to take a stab at it because the market was bullish, you could have, and you would have been paid. I mean, these contracts went from, let's say, like 0.65 all the way up to 196. I mean, there was a massive move on these contracts, and then we got a little 10 reclaim right here, which sent us higher, but. Again, there was a 50 dip down in here, but I'm pretty sure we hit overbought on Friday. So, yeah, I know we definitely hit overbought on Friday, and I wouldn't go like slapping the 50 dip on this chart just because we were overbought. And again, it was getting, what time is this? 1:20. It's not really that late in the day, but after hitting overbought, I wouldn't go slapping the 50 dip. If we hit the 50, then reclaim the 10, then maybe you could have taken a light position and just go long. But since we did hit overbought on Friday, wouldn't have bought that 50 dip right there. Really wasn't much opportunity on Friday. You could have played that little 10 estimate reclaim, but other than that, this is a higher risk entry off the open. So if you caught that, that's all you need for the day. You could have played the reclaim right there. We didn't really come near the 50 that much, but we got a little dip here, and we got the reclaim, got to move higher. So Friday really wasn't much opportunity. Thursday was the day that was a really clean setup. I mean, 0DT cross on calls in a bullish market. I mean, like, that is the ultimate trade you want to look for. When we're in a bullish market. When we're in a bearish market, you just look for the 0-day cross on puts. It's very simple. We know what to look for every day. That's the great thing about the system. I say this time and time again. Like, we know what way is to be favored when there's trend, and going into every day, you want to have a setup that you want to be looking for, and just wait for it. Wait for that setup. We did it on Thursday. We got the call cross a little bit after open, and we got paid. And then like on a day like Friday, the most probable trade, I mean, really was a 50 dip before we hit overbought. Once we hit overbought, you pretty much, you don't need to go short, but that's just the time where you are more cautious, and that's where you start exiting those longs and just be risk off. I mean, you don't need to be in a trade constantly, and when we do hit overbought, you could throw a light position on some puts, maybe throw like a month out on puts, see if we get a little pullback. But I mean, when we do hit that overbought territory, best thing to do is, honestly, if you're in a position, scale out of it, and then just wait. Don't need to be in a trade constantly. The overbought kind of trade is something that I've been straying away from. I used to actually like take trades off of it, but now it's kind of more so like an indicator to me of when to be getting out of a trade, and just honestly just get off the chart, because when we hit overbought, things are getting super extended, and it's like it puts us in a weird spot where it could keep going higher because this trend's bullish, but then again, we are overbought, and like a sharp pullback could definitely be expected, and that's what happened on Friday. I mean, we entered the overbought territory. I honestly don't know the exact levels that we were overbought, but it was somewhere up in this top level area, and you can see what happened. The rest of the day just ended up dumping. So yeah, that's what happened on Friday. And then if we go up on the 30-minute chart again, I mean, look at this. This is textbook right here. We got this dip to the 30-minute 50, and I know for the people that are like really strict to the rules on the system, but we close below the 30-minute 50. But if you just look at the higher time frames, look where we're at. Why would you stop out when these higher time frames are right here? We have this 1 hour 50 right there, and then we also bounce off the 2 hours. So when we're at those super high time frame 50 SMA areas, and even though we did close below the 30-minute 50, that's a position that I'd still be holding, just because we are literally sitting right at those higher time frame support areas. That's not a place where you'd sell just because we did close below that 30-minute 50. So I know some people are really strict on the rules, and it's a situational system. That's what the system is. Like, there are certain times where certain rules are a little different, and certain trades that I wouldn't take that you could take, just like depending on the situation on the market. Like, since we have these higher time frame 50 SMAs right here, like, why would you sell right at super key support that we're still holding? Just because the 30-minute got lost doesn't mean the 1 hour and 2 hour got invalidated, and we're sitting right at it. It's not that much extra risk on the table for those contracts. But yeah, that's pretty much what Thursday and Friday were like. It was good days for the system. System gave a lot of points. That's what we like to see. And then going into this week, I mean, this chart here is still bullish. So what does that mean? I'm still focused on the upside. We're probably going to get the 620s. I think. I'm not exactly sure where SPY's at the moment, but probably get the 620s. And again, we have a plan for both sides of the market. So tomorrow, if we open up green, this 30-minute chart is still crossed on the call side. We're just going to be looking for a 0DT cross on calls. That's going to be our go-to setup tomorrow. If we get it, you want to hammer it, and that's probably a trade that I will size up on because it is like ideal conditions. Market's bullish, and we get a 0-day cross on the call side that confirms we're going to go higher. And now if this 30-minute chart goes negative, 10 goes below the 50, then okay, market's going to get set neutral. Most likely a put cross will be on the table, and that's probably what I'd be taking. So that 30-minute cross would send us lower. Bulls are losing the trend. We usually get a good hefty size move in the opposite direction of that, whatever chart's going negative. So the calls go negative, that means we're going to get hefty move down, usually because the bulls are losing the trend. And if that does happen, we'll probably lose these higher time frame areas of support. So that would probably cause a pretty good drop. So in that case, put cross 50 dip on puts would also work. Again, I go over this every time when we go from one trend to neutral on that initial move. On that negative cross, you can buy the 50 dip on the 0DT chart. A lot of people get confused on that, but you do not buy the 50 dip on the 0DT chart when we are neutral. After that initial negative cross from one trend to neutral, you do not play the 50 dip anymore. It's that kind of one-time scenario where you will buy the 50 dip, and then from there, I really wouldn't go ahead and keep slamming it. So after we get a good initial move on the negative cross, then the 50 dips are not on the table anymore. So yeah, that's the game plan going into tomorrow. If you guys enjoyed, drop a sub. If you guys want to learn, join the Discord down below. All the trades are shared over there, all the knowledge on the systems and there. That's the place to be if you want to learn. That's all I got. I'm out. Peace.